Okay, so welcome to GC Markets Training Introduction to Forex Trading, Forex Basics. And this training is going to be for mostly newbies traders. If you're new to trading, if you have little or no experience trading and you don't even understand, what Forex traders do or how we make money, this class is actually to kind of demystify Forex and kind of explain how we make money trading Forex and how you are already probably participating in the Forex market or, in a much more, I say, less sophisticated way like we are, and then how you can take advantage of the Forex market because it's something we can all do and probably add to our source of income. And then if you're like me, probably use it to release your income entirely. Okay, so my name is Nan Alvin Alexander. I'm a Forex trader, I'm a trainer, I'm a financial analyst. And I'm also a very big crypto enthusiast. So those are my area of specialty, besides being a computer guru too. So disclaimer, when it comes to trading, there are risks associated with trading, so you want to understand those risks, and this is for educational purpose. So you want to trade with money that you don't want to put your life savings in trading, especially if you don't know what you're on about, and that is why we're providing you this training. So you want to follow us on our Facebook channels at GC Markets on Instagram, and then at GC Markets NG on Instagram, and then at GC Markets on Facebook. So this is what we'll be covering today. Not necessarily all of us. We'll look at what Forex is and how it works. We'll look at currency pairs. And then we'll look at some other terms at the end of the day. We'll look at terminologies of Forex trading and kind of like introduce you into the system and get you started. And then at the end, I'll also show you some of the reasons why you should come on board, fund your account, and start trading with us because there are a lot of goodie bags attached to it. So Forex markets, and how does it work? Well, I'm sure if we've all seen Forex traders before, or seen them maybe on Instagram or Facebook, and you see all those fancy charts and things like that looks like, something in the medical lab where that shows the heartbeats. But you don't really get it. And then you probably wonder, how does this work and how does this make money? Well, I could assure you, Forex market is the biggest market in the world. Not just is it the biggest market in the world, it's also the most liquid market. A Forex trader can earn anything he wants, and I do mean that I'm not exaggerating here. A Forex trader can earn, there's no limit to how much you can earn. You just need to know your stuff and have enough capital to deal with it, right? So kind of what I'm going to try and do now is break down Forex in, to the simplest way that you grasp the concept. And then in subsequent lectures, will now start looking at the chart analysis and how I do my thing. Okay, so Forex is actually an acronym that stands for foreign exchange. And it shows the relative value of one currency against another currency. So what that means is we're saying two currencies, if every country or regions, they use a form of tender, a legal tender, so a money. And these currencies, they have values relative to their own locations. Now, because we live in this, the world is now a global village and the world is getting smaller and smaller because, it's import, export, and all of those things. There's always a need to exchange one currency for another. So if you're, for example, trying to buy stuff from China, you're going to have to pay them in the yuan, and that means you're going to have to exchange your naira for that. So Forex is an acronym for foreign exchange, and it shows the relative value of one currency against another currency. Now, to make it easier, I'm going to use this kind of analogy to kind of help you understand it, especially if you don't have any idea about Forex. So let's assume you want to go on a vacation to, let's say, the Bahamas. You want to go on a vacation to this luxurious island. You and, let's say, your spouse, your girlfriend, whatever. You've made the plans. You've done all the things that needs to be done. You've booked your hotel accommodation. You've paid your flight ticket. All of those things. And you decide, okay, so we're going to need some, free cash, some pocket money, maybe to do some spendings and all of those things. Also, you decide, okay, Well, since we've got all the hotel reservations, the travel ticket all set, we need um, we need cash. And so you say, let's go with $1,000 in cash, so that in case we see stocks we want to buy, we will get them. But here's what happened, right? You decide to go with $1,000, but you don't, because you're in Nigeria here, you don't use dollars, you use naira. So you need to change your naira to the dollar, right? So you go to the bank or the bureau de change, those Aboki guys, and you decide to buy dollars. So you go to them and you tell them, I want to buy dollars. I need dollars, and they'll tell you their rates, right? So let's assume, you go to them and then they tell you their rates, and they say the rate is 400 per dollar. Let's assume this is 400 per dollar at the time you want to travel. You say, okay, you're going to give them 400,000, right? In order for them to give you, so you're going to give them 400,000 and they'll give you $1,000 because the rate at the value of dollar to naira is 400 naira to $1. And so you give them 400,000, they give you $1,000. Now you take this $1,000 and then you make your trip. When you get there, you meet this friend. This is your old long-time classmate or classmate or whatever, a friend from your old neighborhood, and he's been there and you've not seen him for a while. And he's so excited to see you. And like, man, my friend, welcome. Sure, don't worry. I'm going to take care of all your needs. Don't worry. Don't. And he decides to be this, this loving friend, that is so excited to see you and pays most of your, for the 2 weeks or a week that you're there, does most of the spending for you. Pays, allows you to stay in his house, and you don't need to spend stuff. So at the end of your trip, which is the point of this illustration, when you're done and you're about coming back to Nigeria, you realize you've not spent your $1,000, right? $1,000 you went away with, you've not spent it. And so you're like, okay, good for me. You keep your money in your pockets or your wallet or whatever, and then you come back to Nigeria. But here's the thing, by the time you come back, you can't spend dollar here in Nigeria. You need naira. So you want to change the dollar you have to naira. Remember, you bought $1,000 for 400 naira. But when you came back a week later, the exchange rate has gone up to, say, 470 to $1. Now, after your trip, it's now 470. Now, you go back to the bureau de change, and then you're like, okay, I want to sell dollars. And it says I'm buying at 470. It's okay, fine. You give him the $1,000 and he gives you or sends you 470K. Now, notice what happened. You just made money. You just made money by buying a currency at a certain time and selling it back at another time. I'm sure you see it's clear, smart, clear as day. You made money because you bought the dollar, you exchanged the dollar to the naira to the dollar at 400, and after a while you exchange it back and it's 470. So you made 70K, clean 70K because you bought at a certain time and then sold at a certain time. Now, this transaction is actually what we do in the Forex market. The only difference being that we don't really need the value of the currency to increase by a lot. From 400 to 470 is a lot. We don't need the value to increase by that much to make a lot of money because of something called leverage, right? Which is the ability to do more with little. So I hope this kind of at least you get the concept of forex. That's why you'd see if you look at this transaction I just explained, there are two currency pairs. There's the naira, the dollar, and the naira. And that's why you see forex quoted in such a form where you have currency pairs, euro dollar, euro card, dollar yen, and then you have them against themselves with the price attached to them. So what you see there is the exchange rate. Okay, so let's proceed. So the forex market is like a fulcrum. So if you think about it, you have this lever, this balancing fulcrum or lever where stops are balanced, and then so something like this, right? So you see, just like the dollar naira example I used, you need $1, right? $1 is equivalent to what, 400, 470 naira. So you need 400 naira to balance out $1, right? And so this is what the forex market is. It's about this balance and scale. So currencies are always, when they are paired together, they are always on this fulcrum where they have to balance. Now, this scale will move to one side, or the other side, depending on the strength or weakness of the currency. So let's assume this side is the dollar, and let's say this side is the naira, or let's the yen or something else. Now, if the dollar, if the side gets stronger, right, this scale will push down. Also, so you have this scale going down because here is gaining more strength. So if you add more, if the dollar gets stronger, or you add more stones here, you see that this side will come down, and then you have this side go up, showing that this side is stronger. Also, if this side stays the same, or if the dollar stays the same, and then the naira or the currency on the other side weakens, if you remove one from here, you'd have also the same case. Here would also go up and here will come down. So is it that this one strengthens or this one weakens for this one, for the value of the exchange rate to appreciate towards this side, and vice versa. If this one weakens and this one strengthens, right, here would also tip down. Or if this one strengthens against this and you have this value. So the forex market is always like this balancing point where the exchange rate is what we actually deal with, but not just the exchange rate in terms of the ones you deal with as the bank. We deal with a much more smaller PEEP value, something we call PEEP, which I'll explain to you, which is the reason why the forex market is, the biggest market, with the most potential in the world. Okay, so I kind of explained this already. So just like whether it's dollar naira or the dollar euro or the euro dollar, it's all about balancing. So as the strength shifts from one side to another, the exchange rate tips to one side or the other. Now, what are the advantages of forex trading? Why should you consider trading forex? Why do people trade forex? Well, I can tell you for a certainty that the forex market is, it's a beautiful place. You know what you're doing. There's a lot of possibility, but I could summarize it in these four steps here. So, the main advantage of the forex market, one of them is the flexibility. You have the flexibility, the ability to, you can be a forex, you can start learning how to trade and still keep your job, right? You don't need to quit your job to start trading forex. You don't need to quit your job. It doesn't require so much time, in terms of you have to concentrate fully. While you're learning, yeah, it probably take you some time, but as you're getting better, and then with some of the incentive that we provide here with you as GC market, you can easily trade the forex market, while you still keep your daytime job. And in this economic situation where things are messy and people's sources of income are unstable, you could easily be making an additional flow of income from the forex market. So the flexibility of the forex market, where it's a 24-hour a day market. So it means, you could trade you could go to work, come back, place your trades. You could place your trade before you leave for work, and it doesn't really need much money drawing. There are things to make it easier, stop loss, take profits, which would mean you don't need to sit down in front of your charts in order to make money. Now, the size of the forex market is also a huge advantage. Now think about it. If you think of those big markets, right? So you think of Lagos, you think of Trade Fair, you think of Lagos Island, and all of those big markets where you have a group of what do you call it, traders or people selling things. Those kind of markets, because of the huge size, will attract huge volume of people, which means for people who have shops there, they'll make more money because the size of the market is attracting more people. The same way, the forex market is the biggest financial market in the world, and it is not even close when you compare it to the second. Each day in the forex market, about $6.6 trillion is exchanging hands. So there is a $6.6 trillion, going from left to right, going from right to left, that you could just try to make $100 a day from the 6.6 trillion. If you are a client, there's a trade given which is up some pips, which could easily be worth $100 or $200, depending on how your capital size and how large you're trading, right? So the size of the forex market is a huge advantage. Then the liquidity, right? Liquidity is just simply the ability to enter and exit the market, at will. Now, if you have ever traded the stock market, I don't know if you have any experience with the stock trading, like shares, buying of shares and all of those things. you would know that it's quite easy to buy shares. Not necessarily it's not that easy, but it's quite easy to buy shares, and sometimes you could have difficulty selling them. Okay, because you give instruction to your stockbroker to place a sell trade. You buy X amount of Dangote shares or MTN shares, and you want to liquidate your position. So you want to sell off. You need somebody at the other end buying it, because you're not going to sell to thin air. You need somebody at the other end buying it. And so it's not as liquid. But the forex market is very liquid that as you're placing a buy, instantly your order is executed. As you're selling or exiting the order, instantly your order is also triggered. So you can easily quickly enter and exit the market, which is why you have traders like scalpers who enter and exit the markets to make quick cash and are done for the day. Okay, so the last one there is simplicity. So the forex market is not complex. What we're doing is just basic. We're buying or selling, right? At first, it might look ambiguous, but it's actually quite straightforward. We're trying to buy or sell a currency pair, depending on analysis, whether it's financial, fundamental, technical, sentimental, but we try to make decision of buying or selling, and then stay with us, and we would help you to become better at making those decisions at trading, right? Okay, so let us proceed. What do you require? What are the requirements to trade forex? What do you need to trade forex? Do you need a lot of things? Well, no, not really. I could assure you that all the things you need to start trading forex you already have, because you need a smartphone, right, or a PC. I usually trade with my PC. I monitor my trades sometimes with my smartphone, but it doesn't really matter. You need a smartphone or a PC, and then you need an internet connection. Now, I'm sure you have a PC, and I'm sure you have a smartphone. You may not have a PC, but I'm sure you have a smartphone. And I know that because you're listening to this training, which is online, and you need, a smartphone, and you also need internet. So I'm sure you have that as well. Now, you also need a broker's platform, which is where we fall in at GC Market, and then we'll provide you with, state-of-the-art trading facility, and also guidance and support and training, so that you can become a better trader. And then finally, last but not least, you need startup capital. Well, startup capital is also not a problem, because I'm sure you also have it. The minimum to start trading with GC markets is about $50, so which is about 25 to or there about 1,000, and which is something that you don't expect. I do you don't expect to make something from nothing. Uh, I don't think any reasonable person should expect that. But the idea is you could start out small, and then try to grow from there. Now, what are the currencies that are traded on the forex markets? Now, there are eight major currency pairs. So we have the dollar, we have the dollar, which is the United States of America's currency. And you have the euro, which is the eurozone's currency. You have the JPY, which is the Japanese yen. And then you have the GBP, which is the Great Britain pounds. You have AUD, which is Australian dollars. Then you have Canadian dollars, the Swiss franc (CHF), and the New Zealand dollar. So these are the major currencies, right? And their countries. So now, if you go back to our earlier example, you notice that currencies are always quoted in pairs. So a permutation of all of these will give you a handful of currencies to trade. So you have about 28 major pairs that I personally watch, look at to trade, and they're just a combination of this. So you have, let's say, Euro USD, USD JPY, GBP USD, combination of them. So you get better at these things, and then you also, it's important to also understand that these currencies are associated with countries. So depending on what's happening in these countries. So for example, if something like let's say the yen or the Japanese yen gets their economy is boosted, probably because of some economic factor is boosted, you can expect the Japanese yen to be strong. So understanding the kind of like fundamentals of these countries kind of helps you to make some more better decision. Now, how does it work? How does the forex market work? Well, in every business, you make money by buying goods or creating the services at the lower price, and then selling those goods or those services at the higher price to make a profit. But it's the same thing we do in the forex market. We buy and we sell. We try to buy at a low price and then sell out at a high price. Now, the only difference with this and the physical business is in physical business, you're buying something physical. So you sell phones, for example, you buy physical phones, you sell laptops, you buy physical laptops, you provide services, you sell internet devices. You're actually selling something physical, providing the services people can access. Now, the forex market, what we're actually doing is actually buying the exchange rate. So we are speculative investors in this case. So, for example, if you think about the stock market, for example, if you go and buy the shares of Dangote, the only reason you're buying Dangote shares is because based on your expectation, based on market analysis, based on observation, you believe that the shares of Dangote would appreciate in value. So you buy it at a lower price so that when the shares appreciate, you can sell out and make profit. That's exactly what we do here. The difference is the difference with the stock market and this is that in the stock market you only make money when you're buying the share, right? So for example, if you buy Dangote shares and the value of Dangote stock increases, you make money. But if you buy Dangote shares and the value decreases, you can't make money as the value is coming down. But in the forex market, because we're actually buying, if you go back to the earlier stuff I mentioned, it's a fulcrum, so a lever system where it's two currencies on the balance. So as one currency is stronger, it tilts to one side. As one currency is weaker, it tilts to the other side. So if one currency is stronger, it means the other is weaker relative to it. Or if one currency is weaker, it means the other is stronger relative to it. So we can make money in the forex market whether we are buying or we are selling. Because in reality, when you buy, you're actually selling something else. And when you sell, you're actually buying something else. So this concept will get easier, will get much more simpler as you get your hands dirty, as you get better at your training. Now, one thing you need to know if you're going to have any success in the forex market are some key terminologies. So one of them is a PIP. What is a PIP? PIP, PIP. Now, PIP actually stands for price interest point. And then this is actually, how do I explain this? It is the smallest value, which matters kind of by which a currency or an exchange rate goes up or down. So let me say that slowly. So what I mean is now look at this exchange rate. So this is an exchange rate. So you have euro against the dollar. So we call this in the forex term we say euro USD. So this is the price of euro USD. So this exchange rate means 1 euro, right, will give you $1.0905. That means in order to get um, if you have the dollar, if you have the euro and you want to get the dollar, a euro will get you $1.0905. So if I'm going to change this to the naira, so let's say the USD against the dollar, so USD against the dollar, let's assume this was USD, sorry, against the naira. Let's assume this was USD and this was the naira. It will be like USD NGN, let's say 475. So that means $1 will buy you 475 naira. So this means 1 euro will buy you this amount of dollar. Now, if you're dealing with if you're doing normal exchange rate transaction, you go to the bank, you want to buy physical dollar. Usually their concern, the main where their concern actually starts or ends at the second decimal place, right? So there will be 1.109 is kind of like where the standard where it goes out in terms of exchange rates because it takes about 100 pips, right? It takes about 100 pips to make 1 cent, for example. So it takes about 100 pips to make 1 cent. Now, so this last value, the fourth decimal place, is what we call the pip. Now, if the value the exchange rate goes up from this 1.0905, it goes to 1.0906, it has increased by 1 pip, right? It has increased by 1 pip. Now, it will have to increase by 100 pips 99 pips plus 1 before you now have a value change here. So it's now, if it increased by 100 pips, it will go to 1.110, right? So 100 pips makes, kind of like 1 cent. But as traders, our interest goes, starts up as at the pip. If you remember earlier when I was explaining your transaction when you traveled abroad to the Bahamas, and I said, as traders, we don't necessarily need price to go up by that lot. We don't need price to go up 70 naira difference to make a profit because that's kind of like a huge move, right? To do that. And that's because our interest starts out at this low point. And when we go to the chart, you see that each currency pairs, like for example, the Euro USD have an average daily range of about 80 pips. So in a day, it moves around 80 pips. Now, if I tell you when I go to the next slide, when I talk about lot size, you'll see that 80 pips could easily mean $800. It could easily mean $8,000. If you have the size for it, it could mean $80,000 if you have a huge capital for it. And as well, it could also mean $8, or $80. Now, that is what will now take us to lot sizing, right? So lot sizing. I hope you guys are getting, are following along. If you have questions, put them in the chat box and I'll come back to address them. Now, lot sizing. So lot size is just basically the value of the value you're investing, right? The value per tip. Now, if I go back to the previous example, I said when the price increase or decrease, it decrease, in multiples of pips. So if it goes to 0.6, that's increment of 1 pip. It goes to 0.4, that's increment of 1 pip. So if it goes to, 9.10, so 9.10, that's increased by 5 pips. Now, that will now translate to this. Now, when you place a trade in the Forex markets, when we place a trade buy, and we'll have to use one of certain type of lot size. So there are three basic lot size. So there's a standard lot, there's a mini lot, there's a micro lot. Now, you don't need to master or carry a lot of numbers or do calculations in your head. What you need to understand is when you place a trade using a standard lot, right? The value per pip is $10 per pip. So it means if the price goes up 1 pip, that's an appreciation of $10. If it goes down 1 pip, that's minus $10. Now, if you make a profit and it closes out at 80 pips, you've made $800, and this could happen in 2 hours, it could happen in 3 hours, it could happen in a day. But if you make $800 a day, or even if you make $80 a day, we're talking of some serious money. Now, I'm going to try and I know this may still sound a little bit confusing, but a simpler way to understand this is, let me use this for example. Imagine that you want to buy shares. So I don't know why I like to use Dangote shares, but let's say you want to buy shares and you want to buy Dangote shares. The price for Dangote shares today, let's say it is 1,000 naira, right? So 1,000 naira per unit is what the Dangote shares is selling today at this time. Now, if you decide to buy 1,000,000 units, right? Or let's say you decide to buy 100,000 units. Say, okay, you call your broker and say, buy me 100,000 units of Dangote shares. That means you will need how much to buy 100,000 units? Remember, the price of Dangote shares is 1,000 naira. So you will need what? 100 million? Yes, 100 million naira to buy 100,000 units of Dangote shares. Now you use 100 million, you're a big boy, so you invest 100 million in Dangote shares. Well, that's crazy, but let's say you do that. Now, if you buy 100,000 units of Dangote shares at 1,000 naira, you need 100 million to do that, right? If my math is not wrong. Now, me as your friend, I also decide to buy the shares, but unlike you now, I don't have 100 million to buy the shares, so I decide to buy 10,000 units of Dangote shares. Now, it's still the same price that I will buy at, right? Because the price is still 100,000, I'm sorry, 1,000. But in order to buy 10,000 units, I'll need what? 10 million, right? So you bought 100,000, it cost you 100 million, I bought 10,000, it cost me 10 million. Now the price of Dangote shares now goes up from the $1,000 that it is today, and let's say next week goes up to like 1,050, right? So 1,050. So the price goes up from 1,000 to 1,050. And then we now decide to close our position to, okay, tell our broker, sell Dangote shares, give me back my profit. When you liquidate your position, you will have a profit of, you bought 100 million, you bought 100,000 units, and the price increased by 50. Remember, what the price increased by is 50 naira. You'd have made a profit of 50 times the amount of units you bought, which is in this case 100,000. So you'd have made what? 500,000 on that particular trade. Myself, I would have made, oh, you'd have made, yeah, 500,000 on that particular trade. And then or 5 million on that particular trade because you bought 100,000 units. And then I did the same thing, I'll make 500,000. You see, the price increased by the same amount within the same time. But because of the amount invested, we make different values or different amount of money at the end. So that is exactly how lot sizing works. So the profit or loss you make is equals to the number of pips you capture. So if you take a trade and you capture 10 pips, right? The profits you make is that 10 pips you capture times the value of your lot size. So if you use a lot size of, in this case, one standard lot, in which case 1 pip is equals to $10. So in a standard lot, 1 pip is $10, and you make a profit, you capture 10 pips and close your position, you would have made 10 times $10, which is about $100. Now, if I took the same position and I used a mini lot where 1 pip is equals to $1, I'd have made 10 pips times the lot size, which is $1 per pip, and I'd have made, $10. So while you made $100, I made $10, even though the price went up by the exact same amount, right? And so that I hope that makes sense. Now, this I'm not going to bombard you with a lot of things because, especially if you're just learning forex for the first time, this what we've talked about might actually just be a handful, right? So, as forex trader, when you come on board, you have to be dealing with stuff like this, so the charts where you would be looking at, this. So, what we do would demystify, I'll try and explain all of this and how the forex market work and how we actually make money from this kind of system. Well, before I do that, some of the things we look at understanding the chart, we look at market analysis. So I'll walk you through this. Understanding the charts that I just showed you, how to do that. There are different types of market analysis. There's technical analysis, there's fundamental analysis, there's sentimental analysis as well. And then, I'll help you develop the kind of trader that help you develop the kind of trader that you already are and see if trading is actually your thing. And then we'll look at some more advanced concepts. And sometimes every weekly I'll walk you through, some new concepts, not necessarily new, but some new idea, and then you can keep getting better at what you do. And then I help you understand trade management and psychology. So these are some of the things we'll cover subsequently. But most of these would only be available to our traders who are already, to our clients, people who are already trading with us. So um, that's where we'll now do some more in-depth. I'll even have, so there's going to be sections where I'll show you currency pairs I'm analyzing, how I'm looking to trade them, so you can, kind of like if you wish, see what I'm doing and how I do what I do. But in order to get access to that, you need to create an account and fund your account and start trading with us. Now, when you create an account, you fund an account, and you start trading with us, we're not going to leave you to yourself. So we have daily signals, more like trade insights that we give to our clients, which they can trade. And then it's a Telegram channel. So let me something like this. You can see these Telegram channels, Telegram updates, where we give our clients trades, so with entries, exits, analysis behind them. So not only will this help you become a better trader, but it can also help you to start making profits, right? As you start making profits, even while you're learning the act of trading. So you could start taking trades and then focusing on, taking these signals that we give and then focusing on them. Yeah, obviously these things are, past performance is not necessarily a prerequisite for future results, but because we know the way the market works, you could tell, we could do speculative analysis of the market. This is basically what we do. So provide you this insight, and you could see entries, exit. This is the most recent one. If you're new to trading or you're already trading, you can look to do this. So this will probably be like a bonus. This is a trade I was given. I think it's already in profit already currently. So it's Euro card we bought at 53.73. So let me go to the chart and see what the market is doing there. So 53.73 for Euro card. So let me see and see where our price is at this current time. So these are key concepts. Some things we do to help you become, make it easier for you to start trading, become a better trader now as you look forward to much better things ahead. Okay, so I don't know why this is not loading up as quick. Anyway, but you could look that up. So if you have any questions, let me check if anybody has questions for me that I would need to attend to. You can easily drop your questions in the chat box. If you don't have an account with us yet, you might want to look into doing that. You could reach out. So you can reach out to me. Just drop your name and your phone number in the chat box, and one of my staff will get back at you. So that will be all for now, I guess. We've kind of broken down trading, and so I'll see you on the next training. So have a nice day, and bye for now.